Now, Bitcoin has not made much price action difference. We continue to chop. It did see a little drop on this. Like if we go to the intraday 10-minute chart, yes, it did drop on the back of this jobs number. Now, again, what does this tell us? For all you crypto people out there, what's important about this is it tells us it's still a risk asset. Maybe it's not as risky. People aren't viewing this like, other things. But remember, gold sold off and Bitcoin sold off too because the dollar is going higher. So markets are going down. I mean, this is wild, guys. Markets are going down, bonds are going down, gold's going down, Bitcoin's going down. Pretty much everything's going down except yields in the dollar, which again is a flight to, at least the dollar's a flight to safety. Yields is just a flight to safe return, right? You're getting 5%, 6%, whatever you're getting. But again, Bitcoin having a nice little dump out here. Let's flip back here on the charts. And if we go to the chart on the daily, basically, this is all you need to know about the daily Bitcoin chart. There's levels you want to be following. The first level here, basically, if we consolidate back in here, as long as this trend line holds, it's bullish, okay? This could also go sideways and go up. Either way, Bitcoin near term remains bullish. In fact, this is looking more and more like a bullish consolidation pattern. I still think there's a good chance we test this 29,000 level, maybe even testing up here in the near term. Now, again, doesn't tell me where we'll be in 3 months from now, but ultimately near term, 1 to 2 weeks out, unless this level breaks, it's a bullish bias near term on the chart of Bitcoin. Now, if this level at 26,000 breaks, then it's bearish. Once you get below here, this now looks to go much, 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 much lower. We probably would head down, take out this 25, 24 level, and honestly head to 20,000 if that does happen.
The Israel-Hamas conflict, a long-standing geopolitical issue, has captured global attention for years. However, the cryptocurrency sector remains remarkably unaffected by this contentious conflict, and here's why. Cryptocurrencies operate globally, transcending borders and politics. Their value is determined by factors like supply, demand, and global sentiment, making them largely impervious to regional conflicts. Cryptocurrencies are decentralized, not controlled by any single entity or government. This independence shields them from regional geopolitical turmoil, as their value depends on factors beyond local politics. Some investors turn to cryptocurrencies during times of instability, using them to diversify their portfolios. This increased demand can boost cryptocurrency values when traditional markets falter. Cryptocurrency adoption has surged globally, not just among individuals, but also businesses and institutions. They're recognized for their utility beyond speculation, making them a mainstream asset class. Don't get me started on Bitcoins. Berkshire Hathaway's Charlie Munger calls crypto the stupidest investment I ever saw. Charlie Munger, vice chairman of Berkshire Hathaway, recently expressed skepticism about both AI and cryptocurrencies. Munger thinks AI is getting more attention than it deserves. While he recognizes its importance, he doubts it will bring about a utopian future, especially in curing diseases like cancer. Munger thinks AI is getting more attention than it deserves. While he recognizes its importance, he doubts it will bring about a utopian future, especially in curing diseases like cancer. Munger doesn't mince words about cryptocurrencies. He calls Bitcoin the stupidest investment and predicts most cryptocurrencies will lose all their value. Munger's views align with Warren Buffett's, who called Bitcoin a gambling token. Other industry leaders, like JP Morgan's Jamie Dimon, have also been critical of cryptocurrencies. Cryptocurrencies are still recovering from a 2022 sell-off that wiped out over $200 billion from the market in a day, with Bitcoin trading far below its all-time high. Let's continue our enlightening discussion with Gareth Soloway.
Let's take a quick look at gold, guys. Gold's actually performing relatively well. Now, you might say, wait, how does Gareth say it's performing relatively well? Look at that daily chart. But I'm talking specifically about today. You have to look at today. How is the dollar reacting? How are yields reacting? And then what is gold doing? And now, if you told me that the dollar and yields were going to be spiking this much, I would say, man, gold's probably down, $20, $30 per ounce. It's basically almost flat on the day, right? So think about that. Look at this. And by the way, the beauty of this is look at the technical lines. So again, in theory, if you thought about this, most people would say, including myself, if you told me the dollar and yields were doing this, I would say, man, oh man, gold's probably way down here on this news. But the technicals are telling you something different, right? The technicals are telling you you're at major support. It's oversold. We know the chart here has major support here, going all the way back over here. and look at where you are in an oversold chart. Now, again, right now, look at this. $18.19, almost $18.20. We are literally only a couple dollars away going positive on gold, even though the US dollar has spiked and yields have spiked. Both usually crush gold. So this is a positive, this would be a positive divergence on gold, telling me that now people are saying it, and this is how crazy the markets are. Initially, it was in the last few days, in the last week, oh, yields in the dollar are going to go higher, gold you got to dump. Now it's like, holy cow, the jobs number is so strong that yields in the dollar are going to go up. It's going to break the economy, and that's going to spew major dysfunction, and therefore we got to buy gold because eventually, if you plan it out, gold's going to be a great asset to be in because there's going to be chaos and recession and depression and craziness, right? I mean, think about this. That's what it's telling you right now. All right, so we'll see where gold is later today. But again, fascinating stuff on the chart of gold here as it's holding up. This is your intraday 10-minute chart on the 10-year yield. The jobs report came out here. Look at that spike in yields. Massive move to the upside from basically 4.74% all the way to 4.9%. That is earth-shattering. That is a major jobs report. Let's talk about what that jobs report said. Market had expected, let's talk a little bit here. Market had expected 170,000 jobs in the latest month. And again, these are the numbers for September. The number that came in was 336,000 jobs. Almost double, essentially double this amount. All right, guys, epic jobs number today. Now, again, this causes everyone to say, wait a minute, earlier this week, we had the JOLTS numbers, which again were job openings, which showed a ton more openings for jobs than expected. That was bullish. Early in the week, yields spiked up. Then we had the ADP private sector number that was very, very weak. Yields came back down. So which one is the king here? And this tells the story. All right. So again, jobs report showing a very strong jobs market still, which now makes people think, uh-oh, yields are going up. That tells us the interest rates may go up via the Federal Reserve. So really epic numbers here, guys. We are off of our highs. If we flip over to the daily chart, there's your daily. If we go to the 10-minute chart, the dollar is actually starting to decline a little bit more here. So we are coming back in. And again, just going back to the daily chart, what are we watching? We're watching this trend line up here. It hit. This should mark a short-term top. If it does, again, yields start pulling back in the near term and the dollar does, the markets will catch a bid. So we watch for that. All right. Wow. Overall, guys, I think at this stage, it's one of those scenarios where I have to watch this market like a hawk. This is not an easy market to navigate. The whips and how much influence the dollar and yields, and even going to the Japanese dollar, the yen, the dollar yen is playing into this market. Comments by the Federal Reserve, and all of these things are playing in. And next week, again, I have to confirm this, but I think you're going to get some key inflation. There you go. Economic data. And ultimately, we're going to get more earnings. So earnings season, not next week, but the following week, earnings season comes out.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.